Good morning, everyone. Futures Brizio here, 9:50 a.m. on Wednesday, July 17th. Hope everybody's doing great. And again, sorry for my absence. I actually was out of town for about a week and um, just been a little bit busy. But back at it today. Um, although looking at the charts, at least at the moment, not sure I'll be trading today. But anyways, let's jump right into it. We'll take a quick look at these three markets and then we'll just leave it there. So I've made a little bit of a change to the markets I'm following. I've um, I'm going right now with copper, wheat, and gold. I've eliminated everything else, including natural gas. And gold, I'm a little bit 50-50 on right now, but we'll see. But I do like copper and wheat, although they can obviously all these markets can be volatile, and they can all get into times of not trending either. But at the moment, I kind of like them. So we'll start on wheat. If we jump out to the 1 hour chart, you can see we're clearly in a downtrend here. You can see on here I do have a 200 period EMA drawn on here just to help visualize with the trend, but obviously you can definitely tell it's in a downtrend with this horizontal line being kind of like the last swing before this recent low is put in. You can see the market's pulling back right now. So my bias on this is mostly to the downside. Although we are trading up. If we go down to the 5 minute, we are moving up right now. So look, as I said before, you certainly can trade this uptrend on the low time frames. Well, here either the 5 minute or you might even have to go down to like a 2 minute chart or a 1 minute chart to actually see these swing lows to trade. Uh, I'm not trading this right now on this market. This is a new one for me to look at. So I'm willing to let these uptrends kind of move right now, and obviously there's no entry for me right now at the moment. Anyways, so um, yeah, so that's the thing. So I'm basically just kind of waiting on this to see if this will turn and start going back to the downside again and resume the downtrend. And if it doesn't, that's okay. Then at some point we'll break this 200 period moving average and we'll start moving higher again. But obviously, from a standpoint of the trend, I actually would need to see it break this swing high up here before I would consider this to be in an uptrend. So we got a long way to go for that. Um, so again, my bias on this is still to the downside. I do have a price alarm set. I'll keep moving as this thing forms new structural lows. So this is the last structural low right here on the minute chart. So you can see I have a price alarm set just below it. So if this finally does break and start heading back down, this will be my kind of my structure that I'd like to see broken to resume the downtrend. And as long as this keeps making higher lows, I'll just keep moving this up. And we'll see how that one goes. So there's no trade currently because again, my bias on this is still to the downside. I literally just started following this market the last couple of days. So, and you can see when I first started, there was just moving sideways, wasn't doing anything. We did put in a new low yesterday, and then today we're trying to correct back up again. So I haven't really had a lot of opportunity to really view this market in real time. So again, if this is going to be an uptrend, I could have traded. Then fine, so be it. Then maybe as this gets continues to move up, maybe I will consider trading it as it goes higher. But as it approaches the 200-day moving average or the 200 period moving average here on the hourly chart, I'm going to be a lot less hesitant to want to go long, again, considering it still is in a downtrend. But it's got a little bit of headroom till it reaches that, so I'll continue to watch it. But for right now, I'm not taking any trades on this. Okay, so over to gold. So again, gold has been trending up pretty steadily here. We put in this low back in late June, and we've pretty much been in an uptrend. And I stopped trading gold for a while, and I did pick it up again the last couple of days. I did take one trade yesterday, and I took a long yesterday up to about this high right in here, and it was a good trade. But I'm not trading it today. You can see on the 5-minute here, we're not really doing a lot here. We're potentially moving a little bit sideways. There was an entry earlier this morning that I missed because I wasn't on the charts this early today. This was at like 7:30 this morning. Unfortunately, I didn't get on the charts until a little while ago, so I just, like I said, I don't like to try to jump on a moving freight train, so I missed this little trade here. But it's not moving all that strongly, but still, it probably would have been an entry. But so, like I said, as of this moment, there's no trade on gold, at least for me. Although, again, there was an entry earlier this morning. Like I said, unfortunately, I missed that one. So, okay, and then for copper, is clearly been in a very strong downtrend. Here's the hourly chart. We've been really technically been in a downtrend since, on the hourly chart, since back here when this structural low was broke, and then we had this pullback. We've been going down ever since, and we've been below the moving average for several days now as well. So copper is in a downtrend. The last entry we had here was back here, which was around, let's see, this would be around 6 o'clock this morning, which I did not catch. I was actually still in bed at that time. So unfortunately I missed that one. So that's kind of the theme for the day, right? That I've missed trades. So, but that's going to happen sometimes. Sometimes these things set up during the hours I'm watching, and other times it doesn't. Like there was a trade on copper yesterday. This one was a more reasonable time. This was at like 8:30 in the morning. We had this signal right here. This was a great trade. But this one happened a little bit earlier, and so be it. So we do have price kind of again kind of consolidating, potentially pulling back. The MACD is trending back up, although it's we've got the price just kind of stagnant, but the MACD is moving up. So that's just weak corrective action. I would like to see this, move up a little bit more aggressively before getting a short signal than having it chop around at these lows here and then get a signal. That's not as ideal to me. But I'll keep an eye on this one. But again, there's a good chance that I won't see a trade on this market today either. So, so that's the situation. Like I said, the one that I'm kind of watching, although the up price action is pretty aggressive right now, is in wheat, to see if we get a sell signal to continue this downtrend. But like I said, right now we are still continuing to go up on the short time frames, even though again on the longer time frame we are still technically bearish until we break this level, which is, you can see it way up here, this line, which is the one I showed you on the hourly chart. That's this line right here on the 5-minute. So you can see we have a lot of overhead room until we get up there. So, that's part of the reason why you could potentially look to, buy this market on this corrective move. But again, just you have to understand that you are longer term in a downtrend. So you do have to be aware of that you could have this uptrend quite suddenly, stop and start heading back down again, and you could get caught on the wrong side of that. So at the moment, I'm not really too comfortable with taking long positions on this because of that. But if you wanted to, you could, because again, there is quite a bit of overhead heading back towards this this swing high up here. Whether you want to use some kind of Fibonacci retracement level, or you just want to look at the 200 period moving average as a potential area to trade it back to, you could do that. Right now it's back to the 200 would take you to the 61.8 retracement level, which is probably, you know, a pretty decent area to look at if you were going to do that. So, but again, I don't want to muddy the water here because, again, I do try to just stick to what the larger trend is telling me. And here's that 61.8 area. This is about where the 200 period sits on the hourly chart right now. So, you know, anyways, but this is the one that I'm watching maybe for something today. But like I said, gold, I don't see it right now because it's already kind of moved. And copper, unless we get a better pullback, I just don't like the looks of this type of pullback again. Even though the MACD is going up, the price really is not. It's just chopping around here. I'd like to see this pull back and then get a nice strong move down and a MACD signal down. Yeah, so those are the three markets I'm trading right now. Everything else pretty much the same, guys. Using the Heikin-Ashi Smooth indicator as my candles. And, you know, trying to keep an eye on the higher time frame just for kind of a bias. Again, doesn't mean you can't counter trend trade on the shorter time frame, on the 1 minute or the 5 minute against the larger trend. As long as you just keep awareness, again, of what's going on those higher time frames, you know, and understand that if you're going to fight that, you got to at least keep, you know, certain levels in mind on the higher time frame, so that if you're going to trade counter trend, you kind of have, you know, reasonable targets to the upside or to the downside, you know, against the larger trend that you can look at and make sure that you're not being too aggressive, you know, with your targets, you know, when it's counter trend and you end up, you know, targeting an area that's the price is never going to get to because the larger trend will continue before that. So that's just kind of a personal choice you have to make about whether you want to, you know, again, trade those counter trend trades, or whether you want to just sit on your hands and wait until you get a signal in the direction of the larger trend, which could have you sitting on the sideline for, you know, a day, two, or more. Just depends on, you know, the size of the pullback and, you know, what the market's doing. And you have to be comfortable with that and, you know, not get FOMO and not get, you know, itchy hands where you feel like you have to be, you know, clicking buttons and be in a trade. And we all experience that, right? You feel like you're not doing anything if you're not in a trade. Well, if you just jump in trades randomly, then, you know, those could be bad trades. You end up losing money and you just kick yourself. And it's like, well, if I just sat here and did nothing, no, I wouldn't have made any money, but I wouldn't have lost any either. And that's the thing, you preserve your capital the best you can. And again, if you're going to trade against the larger trend, just have reasonable targets and just be aware of, you know, levels on your charts, especially on the higher time frames, to look at and just to make sure that you can, like I said, get out at reasonable places. And then, of course, if your larger time frame structures are broke, well, then, of course, your whole bias changes at that point. But, you know, we're not anywhere near that on any of these markets right now. So, all right, so I'll leave it there, guys. I hope everybody has a great day. If anything does come about, I'll let you know. But, again, apologize about being away, but nothing's really changed. I do kind of just continue to tweak which markets I'm following. And, you know, I have different reasons for why I like to trade different markets. And like I said, gold is one I'm kind of on the fence on right now. If I do trade gold, I'm very selective about the trades because it is so highly manipulated, because it is so widely traded by retail traders. So it does have a lot of price manipulation. And it also is very subject to any economic releases too. So you do have to, you know, be aware of, you know, what's out there in the news for economic data, because gold can have very volatile whipsawing at those releases. So just be aware of that anyways. So, all right, guys, so I'll leave it there, and hope you have a great day. As always, make sure you smash that like button and subscribe to the channel if you're just finding it for the first time. And questions, comments, leave them below, and we'll talk to you soon. Thanks.